Hey guys, it's Jared from Beyond Accountancy. It's April 2020 and we're getting a lot of questions lately about home office expenses with people working from home maybe for the first time and others working from home a lot more. People want to know what they can claim, what records they need to keep, is it going to affect capital gains tax? So let's run through some of that with you today. So we're going to cover what expenses can you claim if you work from home. Can you claim home office hours if working from home is a choice, not a requirement? So if it's a requirement for many people now, but that's not always the case. Why you need to distinguish between running costs and operating costs. And a really common question, does claiming home office expenses mean you have to pay capital gains tax on your home when you eventually sell? There's a bit more detail and explanation later in the video, but if you just want to know the basics and what most people can claim, you'll get that in the first couple of minutes. So let's jump into it. There are four main deductions you can claim if you're working from home. For power, heating and other running costs, phone and internet use, office consumables and minor equipment, so things up to $300, and then computers and devices over $300. The $300 limit is the difference between whether you need to claim on to depreciate an asset or not. I haven't included office furniture and cleaning on the list, and I'll explain why in the next couple of slides. So, power and running costs. You've got two ways of doing this. You can claim a deduction for the actual costs you incur, or you can use the ATO fixed rate for home office use, which is 52 cents an hour. The fixed rate is based on the typical cost of the power and furniture you would take to run a home office, and they adjust that from time to time. Actual costs are commonly worked out by taking a floor space of the house. So say your home office is 1 room in an 8-room house, there might be 12.5% you could claim as the floor space. You claim 12.5% of power, gas, things like that. But most taxpayers don't use that method because it's too much of a hassle to work out. They use the fixed rate method. So the fixed rate method, the 52 cents an hour, covers heating and cooling, electricity, decline in value of office furniture, also known as depreciation, and cleaning. So this means if you claim 52 cents an hour, you can't also claim $100 for a chair and $200 for a desk, for example. It's one or the other. So if you fitted out your home office for the first time this year, maybe because you've been forced to work from home and you need to upgrade, you might find that actual costs could work out better. So when you spend a lot on furniture, that's one of the rare situations where you wouldn't use the 52 cents an hour. Most of the time, people would. So the fixed rate method includes heating and cooling, as I said, electricity, decline in value, and cleaning. It doesn't include telephone, internet, decline in value of your computer, software or online subscriptions, office supplies, and computer accessories. There's a whole bunch of things that you still can claim and should claim separately. One of the most common questions I get about home office is, what do I need to keep to prove my claim? It's a good question. Usually we're claiming dollar amounts and we just keep our receipts. Well, how do you do that for hours? Well, essentially you do a logbook, which some of you might be familiar with from keeping motor vehicle records. So for 30 days, just log the hours that you spend in your home office. I'll explain a bit later what I mean by a home office, what would count and wouldn't count as one. But essentially 30 days, log your hours. Pretty simple to do if you're working full time, because every working hour is a home office hour. Okay, it's probably the most important slide of the show. If you don't look at any of the other information, or it's the only thing you take away, this is the page to look at. And basically it's what most people working from home would have as their home office claim. So you start with your fixed rate, you put the hours you work per week. In this case it's 10 hours, that could be a full day from home and a few after hours, or it could be 10 hours, which is all after hours. We use 48 weeks for the working year rather than 52. So times 10 by 48 by the ATO rate, there's our deduction. Internet, take the monthly fixed cost. times 12 months, estimate the work use. This example is 20%. Do the same thing with your phone. If your personal phone has now become a work phone. For the computer, you can see we're splitting it over, so that should say 4 years. Sorry, it's a typo. You can claim depreciation on the computer. Accessories with receipts, you might buy a keyboard and mouse. Here we've only claimed half of that because it might be a computer that's also used by family members, like you might have teenage kids who are students or your partner uses it. So we're just claiming the work use for the computer, and again, same for the software. It could be an antivirus software for your computer, and only half the computer uses for work. So it's a pretty typical claim. So claim your hours, claim your utilities, make sure you do the private use, and it's no more complex than that. So let's get into some more detail. How do you work out that work use percentage? Well, there's no hard and fast rule. You just need to factor in all the members of your household and how they might be using it. So if it's just you on your own and you work from home a lot, you might claim 80% of your internet. If you're in a family of 5 and you've got teenage kids who are using the internet a lot for school and recreation, you might claim 20% of your internet. So it really depends from person to person, as long as you work out an accurate estimate as best you can. So electronic devices, again, you can claim the work use percentage only, but these are the kind of things you can claim. Desktops and laptops, monitors and printers, tablets, and phone handsets. The difference between these and other deductions is if they're over $300, you've got to split it over a few years. So the ATO website will tell you that laptops and tablets will be 2 years, desktop will be 4 years. I couldn't find one for a smartphone, so I thought it would have to be 2 years, given the tablet's 2 years. Monitors 4 years, and a printer, we've got MFC, so multi-function center, like your printer scanner machine, might be 5 years. If it was a smaller, cheap and nasty little inkjet printer, you might just put 1 or 2 years. You can decide for yourself, but they're the typical years the ATO would use. So what about claiming rent if you're a renter, or interest on your mortgage? That comes down to the distinction between running costs and occupancy costs. So running costs are expenses related to the use of the home. Occupancy costs are expenses that you incur just by living there that aren't affected by how the home is used. Let's look at some examples. Running costs are your heating and cooling, utilities, cleaning, equipment, things like that. Occupancy costs are, for an owner-occupier, mortgage interest, rates, insurance, and you can add land tax to that list. For a renter, your occupancy costs are going to be your rent. So none of these change whether you use your whole property for earning your income or none of your property for earning your income. Your rent doesn't go up or down based on how you use it. So these are all sort of fixed costs. They don't change with usage. Most employees cannot claim occupancy costs. So let me go back to that list. So if you're an employee working from home, it's very unlikely you'll be able to claim any of those. You've got to basically show that no other work location is provided to you and you're required to dedicate part of your home as a home office in order to do your job. So can you claim occupancy costs, for example, part of your rent, if you're temporarily forced to work from home during the coronavirus panic? Well, my view, and my business partner Craig's view, is no, you can't. So the ATO has a ruling going right back in time about home office, talks about the absence of a place of work has influenced the courts to let people claim their rent or their mortgage interest working from home. And there's an example of a guy who's the sales manager for an oil company. So I think it was an overseas company. They had no base in Australia, but they needed a sales rep in Australia. So you had to set up a home office, a permanent place, and there was a separate area of the house. And that was a yes to working from home. The ATO have been quite clear that they don't think that applies to this situation, and neither do I. So let me just try and find that link. Actually, I've got a screenshot here for you. So my employer is encouraging me or requiring me to work from home. Could I claim a deduction? Yes, you can claim running costs. No, you can't claim occupancy costs. They will not become deductible only because you're required to temporarily work from home. So only is quite important there. Being forced to work from home is one factor, but doesn't mean you have a place of business. It's not that. It needs to be that separate area. It needs to be set up on a longer term basis. I would think that's 6 months. So no, you can't claim rent. So you'll be claiming these things, which I discussed, and not those things. What if I'm working from home by choice? Well, I mentioned there, you can claim running costs whether you're forced to work from home or not. Do I need a separate home office area? No, you don't, but your deductions will be limited if you don't have a dedicated area. So let's read through an ATO example for a little fact sheet. They compare a situation of Julia, who's a lawyer, who's got a dedicated room at her home where she does her home office. So she can claim the running costs that relate to her work, power, the use of the computer, things like that, adjusted for the private use because sometimes her family might use the office. They contrast that with James, who's a high school teacher. He takes some work home. He's doing some work in the lounge room, like doing report writing or corrections. He doesn't have a separate room. So he can claim running costs, but if he's sharing that room with his family, then he can't claim heating and cooling and things like that. He can only claim the laptop. The difference here is if that room is only being used for work, then those costs are related to work, therefore you can claim them. If the room is being used anyway and you're sharing it with other people, then that cost isn't due to work, so you can't claim it. So what if you're living in a home that's quite small, say an apartment, you don't have a separate office and you're using the lounge room? Could you claim the hours there? Well, I would say yes, if that's all the room's used for. So if you're working from home, it's just you there, nothing else is going on in the house, and you're working from home in the lounge room, then the lights are on, the power's on, the heating's on, because you're there and because you're doing your work. It wouldn't be on if you weren't doing your work. So I'd say that's even though it's not a separate study, it's more like the Julia example, because at that time, it's only being used for work. If it's a shared space and there are other people there doing other things, say you've got kids from home from school as well, then you'd be more like the James example. It's not being used just for work, therefore I wouldn't claim 52 cents an hour. So I hope that one makes sense. That's a common question we're getting. So the last couple of things. What if my employer reimburses me? So I've heard that public servants and some other workers are getting paid extra to work from home, which seems a bit ridiculous given the money you save by not commuting. But the point is some bosses, including Beyond Accountancy, pay their workers extra for remote work. If this is your situation, you've got to distinguish between an allowance and a reimbursement. So you can't claim a deduction for expenses that you've been reimbursed for because you have to incur the cost. This includes home office. If you've been reimbursed, then you should claim nothing on your tax return for whatever's being reimbursed. So if it's reimbursement for utilities, reimbursement for internet, you'd leave those items off completely. However, what if you get an allowance? So the way that we do it here is we do a $20 per pay allowance, so $520 a year, to allow for people to upgrade their internet and their phone contracts to cover the amount of calls and the speed of internet they need to work for us. So that $520 will count as taxable income in the employer's tax return. But then, because they've counted as income, they can also claim a deduction. So you either include the amount you receive and a deduction, if your employer is paying something, or you include neither. You just got to make sure you know the difference between a reimbursement and an allowance. The capital gains tax, the ATO screenshot we showed before, if you go to that link, it talks about how one of the main questions they've been getting is, does working from home mean that my home, which is exempt from capital gains tax, is now liable for capital gains tax? And the answer is no. So the only way you can pay CGT, capital gains tax, when you sell your home is if you can claim occupancy costs. As we've covered, you don't get to claim occupancy costs if you are an employee working from home in most cases. And even if you did claim occupancy costs, it would only be a partial, you'd only lose part of your CGT exemption. So say the office was 10% of your home and you can claim occupancy costs, it would still only be 10% of your gain that's not exempt. So it's not going to be, the chances are it's going to be, capital gains tax will be irrelevant to most people working from home, but even if it is, it's only going to be a small amount. What if I'm not the bill payer? So let's say you're living with relatives and you're not on the bill. Say you might be a young person still living in the family home. If you're not incurring costs, you're not claiming deductions, simple as that. Let's say you live with a partner, so you moved in with your partner and she was already on all the bills. So it was her home you moved into, but you share the cost. Well, if you are splitting the bills between you, you can still claim your half even if it was in her name. And last little tip, if you do have electronic devices, so portable electronic devices, your employer can provide that to you without paying fringe benefits tax. So basically, to cut a long story short, if you've got a device which is 50% or more than 50% for work use, and we're talking about a laptop, tablet, smartphone, anything that's portable electronic device, you can salary sacrifice that from your employer. For two reasons. Firstly, they can get the GST back on your behalf. And secondly, you can claim the deduction up front. Actually, no, and there's a third benefit, you can claim 100% of it. So the difference between salary packaging a $1,300 laptop, which is 60% work use, versus getting it through salary packaging at work, is $275 difference. So if you've got, it'll cost you $995 after tax to buy that laptop. If you get it through work, it'll cost you $721. So there's a bit of detail there, but to cut a long story short, you really want to salary sacrifice those sort of devices through work if possible. So that's it for home office. Hopefully that covers a lot of the most common questions and a few little tips there to make sure you're claiming what you can. Refer to that slide early on where I put a summary table of what you can claim. That's probably the main thing. And I'll put the link to the ATO resources I referred to in the description. If you have any questions, you just keep all the records you can for now, and we'll go through with you at tax time what you can and can't claim. Thanks for your time. Stay safe, and we'll talk to you again soon. Bye.